What's up guys, welcome back to the channel. In today's lesson, what we are going to do is we're going to break a particular currency pair down with smart money concept in order to know what to anticipate in the coming weeks. Okay, you know, it's from what has already happened in the markets, we're going to anticipate what is possibly going to happen next. So I'm going to break this particular pair down. This is Euro USD and this is the 30-minute time frame. So let's start with the breakdown in order to know what we're going to anticipate in the coming week. Okay, now if you look from your left, what we're basically going to see is that price has been in a downtrend. Okay, price was trending to the downside. Now if I try to mark this area right here, what you're going to notice is that this looks like an accumulation area, and you can actually call here your buy side liquidity. Okay, so it would be nice to label this your buy side liquidity. Okay, and this downside can actually be called your sell side liquidity. And I think I have to zoom in a little so you can see clearly, but let's label here first. This is your sell side liquidity. Now if you try to zoom in, if you understand how to trade the power of trade, that is ICT's power of trade, where we have an accumulation, manipulation and the distribution, what you're going to notice is that this is more like an accumulation. This range right here can serve as an accumulation area, and after the accumulation you see price manipulates to the downside, which is something we want to see. And what else do we see? We see price distributing to the upside, and now we have price taking the buy side liquidity. Remember, at first during the manipulation, what price basically did was that it took this sell side liquidity. Now what you're going to note is that we have double break of structure at this point. At this point, what you see is we have a break of structure to the downside, and we equally have another break of structure to the upside. Now as a trader at this point, you're going to get confused because you don't really know where price is going to move. So what you're going to wait is for price to print the next price leg. Now what we can basically see at this particular point, for those who love to trade internal structure, what they're going to notice is that after price sweeps this external range liquidity, you see price after it takes this buy side liquidity, what you're going to see is that price pushed to the downside, and we have a shift in market structure right here. Now if you know how to trade ABC pattern, this is going to be a good advantage for you. For those who trade ABC pattern, where we see where this is our A leg, this is the B leg, and this is the C pattern. I hope you understand that, where price leaves an internal structure before it moves to take an external range liquidity. Okay, so this is a very good pattern. So at this point, this internal structure we have right here is going to serve as a shifting structure, where we see price shifting in the market structure, which can actually be called a change of character. Now at this point, we have two areas which we might be looking to trade from. ICT students, a lot of them will be looking to trade from this inefficiency we have right here, because if you look, we have a massive inefficiency right here. Secondly, we have a very nice order block right here, but ICT students basically looks at price inefficiency. That's about 60% of his students. Now if you're looking to trade from this inefficiency, you're going to see that this is a nice area. This is a fair value gap, and I think I should label it because we see after the change in state of delivery, because this is a market structure shift right here, price retraced back into this area to rebalance this inefficiency. That is the fair value gap. So we're going to label this a fair value gap, right? FVG, which represents a fair value gap. This is one of ICT's best concepts. Now price rebalances this inefficiency, and what you can clearly see is that price starts to push to the downside. So if you're taking a trade from this fair value gap, congratulations to you, you made money from this market. Now price was now pushing to the downside, and what you can see is that price left an inefficiency right here, and it was still moving with momentum, and we equally have another inefficiency right here. Now what you basically see is that price pushed to the downside but failed to take this low, because if you try to mark from this area, what you're going to notice is that we actually have equal lows right here. But what you see price do is price comes back, rebalances this inefficiency we have right here, and you see price comes, taps at this equal low. You know, equal lows are more like liquidity areas, and when you see this equal lows, there's possibility that price is going to sweep the liquidity and is going to continue in the opposite direction, right? We're going to expect a liquidity sweep. Now what we see at this area is that price sweeps after it mitigates this inefficiency, price drops to the downside, sweeps, and we see how price massively expands to the upside. I hope you can see that price expands to the upside, and where was price moving to, price returns back to rebalance this inefficiency right here. Okay, price comes back, rebalances the inefficiency. Now after that, what do we see? from this area we now start seeing price dropping down to the downside. But one thing I want you to note is that we still have this inefficiency, which will be very valid in future if price comes back to it. And we equally have a very nice order block if you trade from order blocks, just like me. Now we still have this inefficiency, and we equally have a very good zone here. This is more like a range created supply zone, and there is an expectation that price will actually come back to mitigate this supply zone we have right here. Okay, now this is where we are currently. We see price dropping to the downside, and you see price comes back, rebalances this inefficiency. We have a very little FVG right here. Price comes back, rebalances it, and we see this massive push to the downside. Now if you try to read structure, what you're going to note is after price sweeps this liquidity area, you see this high right here was able to form this low. We have this pullback right here, and now we have a lower low right here. Now this confirms that we are now in a downtrend. Now if you're looking to trade this market, you're going to be looking to short the market, right? And where are significant areas you could actually look to trade from? Firstly, we have a zone right here, but based on the way I trade, I'm not going to consider that zone. It has no inefficiency, but this is a very nice zone right here, and we equally have another one right here. So these are the kind of zones I will look to consider if I want to take a trade. Right now, continue to read the price action. What can we actually see? Now what you can see is that after price breaks structure, that is taking this external range liquidity, now we're having a pullback into this range. But what you're basically going to notice when price was pulling back is we have something like a shift in structure, and I can actually see an inversion right here. That is inversion FVG. If you try to look, we see we have inefficiency right here, and this inefficiency was not able to hold price. Instead, price moves above this inefficiency. Let me try to zoom in so you can see the price action we have right there correctly. See, we have this inefficiency right here. I hope you can clearly see that. So the inefficiency, our expectation is that price is going to come, rebalance this inefficiency, and a retracement to the downside. But in this case, you see price reacted a little bit but couldn't close at the downside, instead continued to the upside. And we equally have another inefficiency, that is a fair value gap inside the fair value gap. If you watch the last lesson I dropped, this was where I talked about inversion. So if you want to learn about inversion, I think you should go back and watch that particular video. Now if you try to mark here, we equally have more like a market structure shift right here. That is after we had the sweep of this low, we had a shift in structure. Now any smart trader will be looking to trade from this area right here. That's either from this demand zone we have at this particular point, and some we look to trade from this inversion. If you're looking to trade from the inversion, if I try to extend right now, you see price comes back, mitigates the zone, that is rebalancing the inefficiency we had, and we see a continuation to the upside. But this doesn't actually mean that we've shift in structure, right? This is just an internal structure, because this is the highest point. If you look at this is the highest point that printed this low, so we don't have a shift in structure yet. Instead, what we have is a shift of internal structure, right? I hope you understand structure perfectly. Now what you can actually see is price retraced, or will I say moved to the upside for a little bit, and now what we see is that price comes back to take liquidity, because if you see this area has now turned into a liquidity area, more like a trend line liquidity area. So it can be labeled as a liquidity area because this is a trend line liquidity area. And what we can actually see here is that price comes back to mitigate this order block right here, because we have a very nice order block right here. Now what we see, price mitigates the order block, and we have this massive reaction to the upside, which sweeps this external range liquidity, because you see this is a high, and this can actually be called the liquidity area. Price sweeps the whole liquidity area, sweeps these equal highs we have right here, and it continues to the upside. Now what we can clearly see is that price comes to mitigate this high. Remember I said we have significant highs which you could look to trade from. Firstly, we have this high right here. Like I said, we have this one, and we have this particular one at this highest point. Now what price did is it came back to mitigate this zone. Just like I said, I wasn't going to look to trade from that zone, and from what can I clearly see, if you're looking to trade from this week right here, you see price comes, spikes above the week, so you will only be saved if you added few pips above this zone. That's the only way you'll be saved, and this is exactly what I've been experiencing in the market for the past 3 weeks right now, where I see when I mark my points of interest, price will always come, sweep me out of the market, and still continue in my direction. And it's not even funny, because this is not my expectation in the market, and I believe price and the market will actually come back to normal and start paying off like the way it usually do. Okay, so what we have right here is price coming to sweep this external range liquidity. If I try to mark it, sweeps the high, and after price sweeps the high, what do we see? You see a push to the downside, and if I fail to forget, we had this inversion right here. Okay, I think I have to label it for those who will come back to this to read their own price action. And remember, this is Euro USD. Okay, so that's inversion right there, right? Hope the spelling is correct. So for those who will come back for their personal backtest, this is Euro USD, the 30 minutes time frame. So what we're basically doing is you're reading the price action to know what you're going to anticipate in the market in this coming week. Okay, now what we see is price spikes the high and we have a push to the downside. What we note is we didn't still have a shift in structure, because the only way this can be a shift in structure is if price closed above this high, but we didn't consider that as a shift in structure. Instead, we see price continues to push to the downside, and you see we have this inefficiency right here. Price comes back, rebalances the inefficiency, and a continuation to the downside, and we have a break of structure right now. And someone actually said to me, reading the price on Euro USD was actually very hard for him. So I guess that student is watching this lesson now. So if you're the one who said that to me, I guess you're watching this particular lesson. So we had this equal lows, price comes, sweeps the equal lows, and now we're having a massive push to the upside, right? Price is now reacting to the upside. Now what we basically see at this particular point is we still have this inefficiency, which will be expecting price to rebalance. And if you look right here, this is what we see during NFP. Price comes, sweeps these highs, which looks like equal highs. You see price comes back, sweeps the liquidity at the highs. And if you try to look, if you considered here as your zone, if you wanted to trade from this that looks like a range created supply zone, you're going to see price comes back to mitigate that, because if you try to zoom, we have something like a liquidity sweep at this particular high right here. You see we have something like a liquidity sweep. This is a very profitable pattern, which is one of my favorite trading pattern. After price sweeps the liquidity, we have this push to the downside. Now at this point, you see before NFP, what we see is price sweeps these highs, right? Sweep these highs, mitigates that particular zone, and you see price pushed it to the downside during that major news event, which occurs at the first Friday of every month, right? If you want to anticipate that news, you have to visit Forex Factory. Now NFP price pushed it to the downside, even though price closed above this high, which could be considered as a shift in structure. But you're going to see this as a liquidity sweep, because price mitigates the zone, push to the downside, and it breaks structure to the downside. So what we're basically going to do is we're going to consider this as a break of structure to the downside, which is actually a break of structure, because from what you can see, we are still in the downtrend. Price is still pushing to the downside, and what you can see is we have this large inefficiency right here, and our expectation is that at some point price will actually come back to rebalance this inefficiency. Now what we see is we have this break of structure, a pullback, and a continuation to the downside, So you can actually come over here to mark this as your break of structure. And from what you can see, a lot of people might consider this as a good zone, which they might look to trade from, right? They might consider this as a good zone, and these areas can be considered as inducement areas where price is going to sweep retail traders out, right? This could be considered as inducement areas. But from what you can actually see, price comes, mitigates the zone. You see after this little mitigation, we have a push to the downside, a continuation which sweeps the high, and this is exactly the same thing which I've been experiencing in the market. Price will always sweep our highs before a continuation to the downside. So still looking for a solution to this, but the best thing is to be consistent, doing what you've been doing, following your rules. Price will always come back to normal, right? Now price sweeps the high, retracement to the downside, and you see we have a pullback right now. But what I want you to notice is that you're still in a downtrend, right? Price is still in a downtrend. Now what is our expectation for the coming week? Now where is your price range? If you want to look, we're going to see, if you actually go to the higher time frame, you're going to see this high and this low as your range. Now we have two expectations. The very first expectation is that price might react from this zone, because we've seen price has taken this buy side liquidity. We have what we call buy side liquidity right here. Price has taken buy side liquidity, so the expectation is that price might actually mitigate something at this high, then push to the downside to take this sell side liquidity because we have equal lows right here. But if price fails to do that, what you might see is that price might react a little, maybe react from this particular zone we have right here, then push to the upside to rebalance some of these inefficiencies, and after rebalancing these inefficiencies, you might start seeing a continuation to the downside. If you fail to see that, then no, price might continue to the upside to give us a shift in market structure. Okay, so let's go to the daily time frame and see if this our bias is actually correct. So okay, sorry, let's maybe 2 hours time frame or 4 hours time frame. Let's go to 4 hours time frame. Now this is what we've seen on the 4 hours time frame, and from the 4 hours time frame you can clearly see that this inefficiency we have right here is just a supply zone. So the supply zone for me is still very much valid. Price might come back to react from the supply zone, and we equally have a very nice supply zone which we can actually trade from. If you look, we have another nice supply zone right here, which a lot of people might be looking at. A lot of smart money traders will be looking at this particular zone because this zone has nice confluence. We have a liquidity sweep, price pushed with momentum to the downside. Now we have price building inducement areas right here. So this could be a good place to trade from. And remember, I said price fails to take this external range liquidity. That means we might be heading up in this coming week to rebalance this inefficiency and possibly mitigate this zone. If price fails to mitigate this zone, then no, we might be shifting in structure, trending to a different direction. And when price shifts in structure, you might see price coming to mitigate the breaker block, something like that. Okay, so this is it, and I hope you got value from this lesson. If you love lessons like this, consider subscribing to this channel. I'm still Solomon Wisdom, and here is Born to Trade.